Okay, good afternoon.
Thank you for joining us on another video, another Facebook Live this is going to be predominantly for self-employed people, so hopefully we'll get quite a lot of questions asked and answered.
It's Monday the 30th of March and
It's already been a week nearly, so it'll be a week tomorrow that we all closed our doors.
And this is the fourth video that we've done on this series. So thank you for those of you that have been listening to us. And we're going to get going. I'm just going to share this onto another page to help people find us, and then we will get going.
So as I said, today's quick Q&A or information is predominantly for self-employed people. So the Revenue announced some information last week for self-employed, and since then we've been able to get more information, more detail on how you apply, when you can apply, when the money is going to be paid, what the calculation is made of, how to calculate your figures, what's taxable, and all things like that. So that's going to be today's focus, and we are going to be discussing those bits. Obviously, please, if you've got any questions, then please do message in with your questions, and we will hopefully be able to get those answered.
Okay, so let's get going. Thank you for those of you joining us. So what has been announced so far? Well, the self-employed were the last people to really get anything from the government. They started with the employees of their announcements, and it really was a struggle for the government to work out what they were going to do for self-employed people. What counts as work, what doesn't count as work, what would be fair, and they had to make a few arbitrary decisions, and for some people it may seem a bit unfair. There are a few holes in the system and a few people have been missed out, so it's going to be a struggle for some people, but we'll try and run through over all the rules, and then we'll come on and we'll look at the various questions. So let's start with they're going to cover up to 80% of a self-employed person's profits, up to a maximum of £2,500 per month. And it is a grant, it's not a loan, so you don't have to repay it back. However, it is taxable income, so they will add it to your income. You will need to put it on your tax return. And obviously, if you are carrying on trading and if you have a good year, it will be on top, and so you will pay some of the money back through the tax system. But in itself, it's not a loan and you don't need to repay it back. So how are they going to work out how much a self-employed person earns? Well, they're going to look at the average of the last 3 tax returns that you filed. So that's the 16-17, the 17-18 and the 18-19 tax years. It's less. If you haven't been trading that long, they can take 2 years or 1 year to your last tax returns. If you only started partway through the 18-19 years, so you say you've only got half a year's worth of profits, unfortunately that's your lot. It's not going to be prorated, so it will be based on whatever you declared in that year. So if you only declared 10,000 because you worked half a year, whereas you would normally earn 20, they're only going to pay you on 10. You have to have at least 50% of your earnings on your tax return from self-employment to be eligible. So if you're employed and you have a part-time self-employed business and you earn more through your employment, then they're not going to help you. You'll have to get your help from your employer. However, unlike the employees who are being furloughed and can't work, for the self-employed you can carry on working. So you can carry on working and earning. You may be earning more, you may be earning less at the moment, but you can still make a claim. Obviously, if you are doing really well and you're making lots of money, it's up to your own moral conscience whether you want to claim the money. But what we've heard so far, I believe, Chantal, is that the Revenue are going to contact the self-employed person if they're eligible.
Yes.
So it's automatic. So you're going to get the money. So
you don't have to take it though.
You can ask not to take it.
Yeah. So you're basically going to be informed that you're eligible, but then it's up to you and how much you're going to be receiving, and then obviously it's down to you to provide them with your bank details in order for them to pay you the money.
Now, if you are earning more than 50,000 a year on your self-employment, you're also not eligible. So even if you're earning 55,000 or even exactly 50,000, and your business has fallen off a cliff because of this, there's still no help for you. So watch out for that one. So the first payment is going to be in June, they've said, but it's backdated to the 1st of March. So you're going to get effectively a 3-month payment in June. That's a quarter of your year's profit. So if your average, say, was 20,000, you're going to get a lump sum payment of 5,000. The maximum anyone's going to get is 7,500. Is that right?
Yeah, that's correct. So earlier Matthew said that obviously if your income is over 50,000 or more, then you'll get nothing. Please remember this is your average. So if you've got an example of say 31 year, 40 the next year, and then the next year you've got say 60, we don't just look at the year that you've got 60, we take all 3 years, and then you'll be, with those numbers, you will be below the 50 threshold. So even though you've got a 60, you are still entitled.
And the same if it's declining. If you had 60,000 in 3 years ago, and then you had, say, 30,000, and then you had only 10,000 in the 18-19 year, the average of those three is about 33,000. So you're going to get paid on 33, not on the last year when you only earned 10,000. So whether you're on increasing or decreasing, we take the 3-year average. So there will be winners and losers in those cases. If you started self-employment after the 6th of April last year, 6th of April 19 onwards, and therefore you have not yet filed a tax return because you haven't finished the tax year yet, there's no help for you, I'm afraid. You are one of the holes in the system. You're going to lose out. So you have to have filed a tax return for the 18-19 year. Go on, Chantal.
So we've got a question here from Ben. So Ben, your question is based on the fact that you were full-time employed in 16-17, 17-18, and then left employment to go full-time self-employed in 18-19. So they would basically just look at your 18-19 year because that's the year that you've got employment.
I think, Chantal, what Ben is saying is that
self-employment.
He started the self-employment in the 16-17 year, but it was not his majority income until year 3. He quit employment after 2 years of trading. Should we ever think about that one?
Yeah, I have to think about that one because they say that it has to be the majority, but for your 18-19 year, it is the majority. So you would be entitled to definitely your average of the 18-19 year, which is obviously, I'm assuming, better than the previous 2 years. But what we have to consider there is whether they're going to be actually averaging your self-employment for 3 years. But in my opinion, they shouldn't do because the other 2 years fall out of the equation because it's not your majority.
Yeah.
But obviously, once we get more into the information and the details, then obviously those bits will come out. Unfortunately, this scheme is not going to be able to be passing out money until the end of May, beginning of June, by which time I think that questions like yours, Ben, would hopefully be a bit more clearer by then. But I think that to be safe, you could probably say definitely the 18-19 year.
I would have thought so. Okay, so there are a number of people that think they're self-employed. They work as freelancers via umbrella companies. Usually, though, they're actually on PAYE schemes. So just be careful if you are a freelancer. You may not be eligible for this self-employment scheme. However, you can use the employee furlough scheme. You have to look at who you were working for in February. Okay, so you won't be able to work if you want to be furloughed and you claim on your February pay so you need to look at the employer schemes. If you've left them since the end of February, you left in March, and that's normal because you change around firms all the time as a freelancer. You can go back to the firm that was employing you in February and ask to be put back onto their payroll and be furloughed immediately. And most employers are allowing this. The government are encouraging it because the government are using employers as the welfare providers at the moment. So yeah, go back to if you've already left them in March, go back to your previous employer. They should be able to put you back on the payroll to furlough you. It just means when the furlough scheme finishes, they'll immediately get rid of you again. Okay, so just quickly, the owners of limited companies, you're not self-employed either. So this scheme is not for you. Most business owners, company owners pay themselves a mixture of PAYE and dividends. Dividends are not covered, so only the PAYE can be covered again under the employee furlough scheme. So there is a hole in the system there. Currently, dividends are not covered under any government scheme. If you think that's not fair, then you need to maybe lobby some of the trade bodies like the CPI or the FSB There are petitions on change.org that you can go on, and hopefully you can influence that. The other options for you are basically to look at business interruption loans. There's 40 different banks that are doing business interruption loans at the moment, and they're government backed to 80%. So you can pursue some of those. Make sure you don't get one with a personal guarantee, because the government are guaranteeing 80% of it. And a personal guarantee would always come before the government guarantee. What else can self-employed people do? Well, we've got your July tax bill, your payments on account. If you've got a payment on account to make in July, you can delay that till next January. So that's one thing you can do. Hopefully, if you're one of our clients, you've followed our advice and you've tucked away some money in a separate bank account ready to pay your July payment on account. We never advise to spend that on anything other than your tax bill, but as you're going to get a lump sum at the end of June, if you're struggling to tide yourself over until the end of June, you could use your tax money to live on now and replace it with the lump sum payment that you get in June. However, just be a bit careful on that. The tax bill is not going away, it's just being delayed. So what else could you do? If you're VAT registered, you don't need to pay this quarter's VAT. That can be delayed till later in the year. If you pay on a direct debit, make sure you cancel the direct debit, otherwise it will come out your bank account automatically, but you are entitled not to pay this quarter's VAT payment. What else? If these schemes aren't applying or working for you and you need further help, I'm afraid it's going to be the Universal Credit Scheme you need to look at. It has been put up by £1,000 a year, and there is a housing payment element on top as well. So do check it out, see what you can do. There are lots and lots of people are applying for Universal Credit at this time. However, if you've got more than £16,000 worth of savings, you are not eligible for Universal Credit. They expect you to spend that first, and once you drop under 16,000, then you can claim. So if you've been good and tucked money away, then I'm afraid it's not the scheme for you. Universal credits are tax-free, so as they say, every little helps. They're not massive, but they will help. It takes about 5 weeks to get any money from the Universal Credit, and once you apply, they will call you back to check your eligibility, and at that time, if you're in a desperate situation, ask them for an advance, and that will help you get the money a little bit quicker. They can give you an advance on that payment that's coming in 5 weeks. That's really it, I think. That's run through everything. Have we got any questions?
You've got another question here. So, Adam, will HMRC cover 80% of the money companies pay out to employees, or 80% of the current wage? Effectively, will companies lose out on the 20% of the money they pay to their employees? So, effectively, the way it works, this is called furloughing.
Furloughing. We'll get you there. You said it right this morning.
Anybody who watches my previous videos knows I don't like that word. It's an F word in my books. So the Revenue have agreed that with the employees, and very much with the self-employed it's slightly different, but with the employees, they will cover 80% of the gross pay up to a maximum of £2,500. Now that is based on your February 2020 pay. However, they have confirmed that it's not definite that it's going to only be based on the February, because those on hourly pay or 0-hour contracts, your February pay may be a lot lower than previous months, and therefore they're going to consider looking at the last 12 weeks, so basically December, January and February's pay.
And taking an average.
Okay. Now obviously this does not include commission or bonuses which might have been paid over the Christmas period. So it is just your basic pay, and they have said that they will consider this now. It hasn't decided yet whether they will or they won't, but it is in discussion. So we're waiting to hear on the next stage on that one. Yeah. Regarding the extra 20%, it's not compulsory for a director to or for any company to actually make that top up. So it's based on the opinion of the company directors as to whether the additional 20% will be made up or not. The 80% must be paid over to the employee. the 80% goes to the employer, and the employer has to pay over the 80%. It's 80% of the gross amount. So employees, national insurance, PAYE, and employees' contribution to the workplace pension are deducted before they receive that money, before that money is paid over to the employee. So the employee is not going to be receiving £2,500 a month. That is the gross figure.
Yeah, so tax and national insurance apply as normal on the 2,500.
Yes.
Yeah.
So, Adam, I hope that effectively answers that question.
That answers this question I had as well. So, do we pay national insurance on government money? Yeah, it's the same for the self-employed people. When you're getting your 80%, so this lump sum you're going to get in June is going to go on your tax return as taxable income. So you will pay tax and NI at whatever rate you pay tax on your tax returns. So it's the same whether you're an employee or self-employed.
We've got another couple of questions.
Yeah,
here.
well, Peter's just asked a question about company
And so
directors.
has Andrew.
And so has Andrew. Okay, I mean, basically, directors, you can furlough yourselves. It has been confirmed that directors will be able to furlough themselves. They're not allowed to work, but you are allowed to do your statutory director's duties. So that's things like filing company accounts and the annual return or the confirmation statement. But very little else. You can't be working on selling to customers and delivering goods and that sort of thing. So it is possible to furlough a director. Most small company directors are on a low salary and they take the rest in dividends. So if you do furlough yourself, you're only going to get 80% of your PAYE, whatever went on your February RTI. So for most people that might be sort of £700 odd a month. So you're going to get about £560 a month from the government. So yes, directors can furlough themselves, but it will be quite hard for the business to carry on trading if everyone is furloughed.
Obviously, if you've got more than one director, if you're a multiple director firm, one of you as a director could be effed.
Could be furloughed, and the other one could be the working partner.
Exactly. So one of you could be responsible for the director role duties, shall we say, and the other one could be responsible for running the business and making sure it continues in a normal way. So that is a possibility as well. There is another, Matthew mentioned change.org, is that right?
Yep, change.org.
So there is another petition actually on change.org for situations where they are company director and salary positions. So if you are in that sort of situation, then you are permitted, I would suggest you go and sign up, basically sign the petition on change.org that basically says you're basically treating us all unfairly and we all want to be treated a bit more like everybody else, considering that we put a lot more commitment and a lot more risk into our businesses than, say, employees. The employees win and the self-directors are losing out. So I've signed the petition. And
so have I.
Good. And so hopefully any other director-only companies, please go and sign that petition as well, because the more they can benefit everybody else, then the better it is for everybody out there. So I do think it's something that is being really, really asked. So it's not something that they're going to be ignoring, I don't think.
Yeah. Well, it's a lot quieter today. We haven't had as many questions through. Hopefully we answered most of your questions on Friday. And this is really a rerun of what was asked there, just a slightly more succinct version. After the end of this video, we will load the video onto our YouTube channel. So if you search for Champ Consultants on YouTube, you will find us there, and you can see all of our previous videos in this series. This is number 4. So hopefully you can check it out. If you know any other small businesses that need help or want to understand, anyone asks you how this all works, just direct them to our YouTube channel, please, or to this Facebook page where they can see all the videos. That would be really helpful. Thank you.
I think that obviously as things happened so much last week, I think that the new rules and everything else are going to be slowing down a bit more. So we decided that instead of doing daily videos, because there's only so much you can repeat yourself on the same topics, that we'll probably be doing them on 3 days a week. So it'll be Monday, Wednesdays and Fridays.
Yep.
So that will give us the opportunity to be able to catch up on anything else that's being installed or implemented, and anything that you've got any questions that we might not have covered, you please do message us by the Facebook page, by our Instagram page, our Twitter page, wherever. We're on social media everywhere. So
We're also
please do
good
message
on
us
good
there.
old-fashioned email as well.
Yeah, so you can message us on email as well, which is info@champconsultants.co.uk. Hopefully I'll answer the question there to you. But what I'll try and do as well is I'll collate a few questions that I've been asked by clients and other people, and then hopefully we can get those actually done.
We've had one late question in from Paul. How do you actually furlough an employee?
So to actually furlough an employee, the revenue don't actually have the system ready for us to be able to do it yet. There will be an online portal, and once the online portal is live, you will then register yourself as an employer, you will register your employees on there, and you will actually register how much money your gross pay is to pay them. So as I said, regarding 0-hour contracts, they can't actually tell us that until they've actually defined those sort of final regulations. So once they've done that, then we can actually then register it. They anticipate that this should be going live probably next week, and that the first amounts of money will be paid to the employers by the middle to the end of April. So hopefully that's not too long now, and we should get asked some questions.
If you are doing your March payroll before the furloughing scheme is all set up, which you will be, you're supposed to show it separately on the 80% separately on the pay slip, aren't you?
Yeah, so you should really be showing your furlough amount separately on a pay slip, so that it actually has basic pay, whether that's hourly or not, and then furlough, and it actually has a separate figure for the actual furlough amount, so that it is tied up.
And as an employee, if you do top up to the full pay with the extra 20%, you show that as a separate basic pay line.
Yeah, exactly. Just to confirm that the revenue will be doing spot checks on furloughed employees and furloughed employers, because if you furlough somebody, they're not entitled to work. They must not work for you. They must basically, you're paying them to sit at home and do nothing. Basically, as Matthew said, you're acting as, what was the word you used, Matthew? A welfare state. So basically you're acting as the welfare for the revenue, and you're basically getting the 80%, deducting the tax, doing all the admin work and passing it over. So before you actually furlough somebody, if you are going to furlough them, you really have to make sure that both employer and employee sign an agreement that basically says that they accept to be furloughed. It is better to furlough somebody than to actually make them redundant. The job might not be there for them now, however, the job will be there for them, we very much hope, once everything gets back to normal again. So rather than putting somebody out of a job, it's better that they receive 80% of something than absolutely nothing.
Okay. Peter's just asked, is there any news on government grants? Well, as we've talked about the self-employed grants and the furloughing, I assume you mean on rates. Yeah, so Chantal just scroll down, it is on rateable values. So essentially that's a known thing, and we've known that for some time, pretty much since the budget. They announced that anyone with a rateable value of 15,000 or less, you're currently under the small business rates relief scheme. If it's under 12, you currently pay nothing, and if it's between 12 and 15, you pay a proportion of your rates. So if you're on anywhere between 0 and 15,000, you are going to get paid £10,000 from your local council. The local councils are dealing with government to get the money in, and the council will be in contact with you in April to make that payment, probably at the end of April, I would have thought.
Well, no, actually,
earlier.
Well, actually, I had an email from a client today who's based in Redhill, and she's already had correspondence from the revenue from her council regarding the payment of her grant.
So that's Reigate and Banstead Council.
Is that Redhill?
Yeah, Redhill's Reigate and Banstead.
Okay, so we know that the government have given the local councils the money already, and it's a matter of the local councils. It might not be all councils have the money, but I think by the end of this week, all councils will have the money. Yeah. And it's down to them to contact the businesses in order to I believe that what they did in Red Hill was you logged on online, you filled in the relevant application. I don't actually know what's on that information, but I will find that out and I will get back to you on this matter on Wednesday when we have our next Facebook Live, and then we'll be able to see exactly what sort of information they're looking for and what information they require. But I would imagine that those grants are going to be coming out in the not too distant future, considering some boroughs are already starting actioning on it.
And it's not a grant as such, but for businesses with a rateable value between 15 and 51,000 in certain sectors are going to have a no rates at all to pay this year. Okay, I think that's it for today. So thank you very much for tuning in, everyone. And please do share this and let people know what's going on. And we will be back on Wednesday at 2 o'clock. And we look forward to seeing you then.
Yeah, hope you've got everything you asked for.
Thank you very much. Goodbye.
See you Wednesday.